Markets are doing fairly well this morning as we just had some more encouraging inflation data. The Fed's preferred inflation gauge, the Personal Consumption Expenditures Index, or PCE inflation data, came out as expected at 2.4% year over year as expected. And then core PCE, which is PCE minus volatile food and energy, and is something that the Federal Reserve is really looking at, came in at 2.8%. And then month over month, and then core PC month over month came in at 0.3 and 0.4%, respectively, as expected. This is great news. And as a result, stock futures were up, and stocks are up as of this morning. Bond yields went down, and the dollar went down. And Bitcoin right now is reacting very well to this. Bitcoin touched at $64,000 and is now about in the low 63,000 range. Ethereum is at its highest since 2022. Going back to Bitcoin, though, Bitcoin's doing well because there's 900 Bitcoin entering into the market yesterday, and there was about 11,000 Bitcoin bought by in the Bitcoin ETFs. That's 12 times more demand than supply. And the laws of economics say when there's more demand than supply with a scarce asset, the price has to go up to accommodate everyone. And I'm still very bullish right now. My key takeaways is that although this inflation report came out as expected, it still shows that, especially for core PCE, that inflation is slightly stickier than the Federal Reserve would ultimately like. Although we're making great progress, and the inflation's now at its, according to PCE, is really at its lowest level since early 2021. The Federal Reserve is acknowledging the progress, but they want to see even more evidence of inflation data coming back to that 2% level. And I don't think they want to react overly optimistic because they don't want to undo the work they've already done. I think their biggest mistake is if they start cutting rates now and inflation reaccelerates again, they don't want to be in a situation where they have to hike again. So they're going to probably stay put for now. And stock futures were pricing in a June rate cut. In my honest opinion, I think that'll likely have to be postponed until September. We'll have to see. It might even go on until even the fourth quarter if the economy is really resilient. And I wouldn't even be surprised, and it's putting it out there, that the first rate cut could even come in 2025 if the economy proves to be this strong. That's not my base case, but it is possible. We'll have to see. But the market's proving relatively pretty resilient despite these high levels of interest rates. And the productivity gains with AI really should help the economy and stock market in the months and a couple years to come.